Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, February 2nd, 2017. I wanted to cover the semiconductors in this video. There's been quite a few inquiries in the trading room, and I've made it clear for the last few months now that I think in 2017 we'll see a tremendous trading opportunity to the downside. As a swing short trade in the semi sector. It's not there yet, so I've taken a few shots at some individual names. We had some breakdowns that looked good, but we had a few of those trades blow past our stops on earnings. Big moves up. Seems to be this sector definitely to me seems to be in the final stages of a rally. Sometimes you get those big spikes up, blow off tops, but the evidence isn't there yet. As I've been saying, I'm waiting for another short on the SOXL, which is a 3-time leveraged long bullish semi ETF. We had that as a trade I think it was back in December, November. It was stopped out. I think we kept the stops relatively tight on that one. By shorting those 3-time ETFs, you can capture both the move down in the sector as well as the decay that the leveraged sector, especially in a leveraged ETF, especially in a volatile sector, has over time. So either way, we'll address those now. Let's take a look at some of the individual names. We'll start out with a couple of the ETFs. SMH, which we're looking at here. You have 3 main ones that I usually look at when analyzing the sector or trading, and that's SMH, which is, as the name says down below, VanEck Vectors Semiconductor ETF. You have the SOXX, which tracks the Philly SOXX Semiconductor Index. Sometimes these charts load very slow when I'm recording a video. There we go. Same story. This is the major trend line to watch, this one right here. But within there, if you look, these are all minor uptrend lines. I should have used different colors, but you can see here, this line here, this minor uptrend line, forms a bearish rising wedge with that uppermost line. And of course, as you can see there, the most important thing, and it's consistent across the board, are these divergences that only continue to build. So my expectation on the SOX, for example, or at least on the SOXX ETF, is a move down to no less than that 113.60 area. And again, depending on when it starts, if it started today, if we were at a top now, that's about a 12% drop, and I could easily see a move down to any of these additional targets. There's about a 17% drop and a 22% drop. And as always, what I believe I excel in is give me a sector, bullish, bearish, long, short, and I can, usually do a good job of picking out the individual names, individual stocks within that sector. In other words, the most bearish or the most bullish if going long, and do a better job than the sector ETF. Because when you go long or short a sector ETF, you're shorting the good and the bad. And the benefit to doing so is diversity. You don't have you don't take a beating on a blowout earnings on one single stock. If you're long a stock, or I should say, long stock, and earnings misses and it gaps down 10-20%, it's going to bypass your stop more than likely, and you're going to feel the pain. However, if you own the sector, that the loss on that stock, if long, would be mitigated if you were long the sector ETF, since you have other names in there. So it cuts both ways. A little less risk with the ETFs, but a little less profit potential as well. All right, so let's look at the names. Oh, one more. I'm going off on a tangent here. At XSD, which is a Spider's S&P Semiconductor ETF. And again, they're all tracking semiconductor stocks. Their individual holdings are different in the weightings, of course, but for the most part, they're holding a basket of much of the same stocks, so therefore you'll have very similar chart patterns. And again, the common theme here is bullish rising wedge patterns with negative divergences. And it's not as if these previous divergences that I pointed out in the past didn't play out. They did play out for a correction. They were minor corrections as the sector continued to push up and make new highs with even larger divergences building. So again, I'm not giving up at all in this sector yet. And there's a few names, even one like I comes to mind, Taiwan Semi TSM. That's still an official trade idea. Quite a few others that I have not yet removed, and I'll try to do that when I get a chance. I've just been focusing on moving forward, finding new ideas, analysis, answering questions, and other things. So I'm a little behind, quite a bit behind on updating the trade ideas. Let's go back to SMH because they have a much smaller holding. A list. What I'm referring to here, I have a watch list here of related items that you can see. Let me move that up here. And so we'll go through the holdings of SMH to kind of give us an idea. When we go to XSD, if you look at this, you now have 40 items. So you have to scroll down here. It's too many to go through in this list. There's a lot more semis. Same story on SOXX. You have quite a few names, 32 in there. So we're going to go over the holdings of SMH, which should be typical of the sector. There's only one in here. If you look at the holdings lacking, I get a lot of questions on. Had it as an official trade until yesterday. It was officially stopped out, and that was AMD. So I'm going to start there. Then we'll roll into the components. Since I just had a question fielded to me on AMD, actually a couple in the last day or so. That was based off the 60-minute chart. We shorted here, hit the first target for a nice profit, went about 2/3 of the way down to the second target, and then reversed. And the stop was, gosh, I covered it in the trading room. It was just taken out slightly. Now, what I had mentioned, somebody asked, is it still a short? I said maybe. My analysis in the trading room, as it was approaching this previous reaction high, more often than not, when I see that happen, although a stock can fail, that is a resistance level of previous reaction high until taken out. But what's the most common scenario is you see these stop clearing runs, and I believe I pointed this out in the trading room yesterday, that if you have a stock coming up approaching a previous high like that, you're probably going to overshoot it, which we did, and then fail. What that does is it blows out the shorts, any shorts that had a stop loss order placed just above that previous reaction high, and the market makers and the powers that be, they know that, and they run in, they clear those stops. So if they can just push the stock up there, they clear out a lot of shorts. They also suck in some longs. TA 101 or old school investing is buy a stock at a 52-week or a new high. It's bullish. And so if you can run it up there, you also have some new longs jump in. And then once they realize that breakout has failed, they tend to turn around and sell out. So this is how the market works, or at least my view on it. And I know that to a greater or lesser degree holds true, meaning the institutions know where the retail money, the dumb money, weak-handed longs and shorts have their stops placed. And that's called a stop raid. Also a bull trap. So we'll see. And now what I'm looking at here is the divergences on that new high were only extended. So going back from this point here on the PPO, you can see we're still just making a much larger divergent high. We had prices from this point, went on, made a high, came back down, now made a new high, yet the PPO, MACD, if you want to put that up instead of the PPO, it'll look very similar. RSI looks about an equal high. So you still have, this is a divergent high, and so far a failure to hold a breakout of a new high, which in itself is bearish, especially if you continue to see more downside, especially impulsive selling. You see the volume pattern down here. I have the volume bars muted down quite a bit, but these white bars, see the big volume surge? That is somewhat indicative, or it is indicative of a potential buying climax, or aka a blow-off top. So if you see continued downside, that will only confirm this sell-off. This failed breakout, and you had the divergence. Everything's in place for a nice reversal on AMD, even though we just had those stops clipped. And when it comes to the official trade ideas, I stick by what I say. If I didn't revise the stop ahead of time, then the trade is officially removed. But I'm covering this because I'm sure there's some still in the stock, and actually I know there are. I had a few questions put to me. So these are now all still downside targets. I would add one more here. If you're just looking for a quick pullback trade, I can see some support here. That number is around 1170, then you have 1031 and the other targets there. And again, I did a lengthy video on AMD to really put in perspective just how much potential. Anytime we've ever become this overbought with divergences, especially on the weekly time frame, which we're looking at now. I already did this, quantified it before, but we're looking at drops. There's 80+%. I can't grab right on the line what happens with TC2000. If you try to pinch to use a measuring tool, you're going to move that line, so I have to move it up there. But again, there was another drop, overbought. We didn't even have a divergent high. We just hit overbought, and there was another 80% drop. So like I said, a tremendous amount of meat on the bone for these short trades, and everything that I'm looking at on the weekly chart now is every bit as much, if not more bearish than it has been at these previous highs where we had drops of 50 to 80% or more. So I think there's a huge potential, and it's all about timing. It's about getting the timing right. We were early on this. Well, that was profitable. Depends. If you book full profits there, you lowered stops, and you still made money, but it didn't hit my final target. I had enough time spent on AMD. Those are the things to look for. Let's get back now to SMH, run through a handful of the stocks. I'll go through the components here. They're sorted by market cap. So as I go down the line, just remember the ones that I'm starting with, like Intel, Taiwan Semi, those are your larger semiconductors that typically have a bigger impact on the sector as a whole. And as I get down the line, they're smaller companies. Oh gosh, guys, I really didn't, in anticipation of this video, I didn't clean up the charts. I haven't updated all of these charts. So I'm just going to tell you this, that I don't have a very strong opinion on Intel other than you can see this is a weekly chart I jumped back to. This is late 2014, this high right here where we had a head and shoulders pattern. We traded that, and that was a profitable trade, I believe, back then. Head and shoulders topping pattern. But most important is this previous reaction high here in late 2014. We challenged it once back here in late 2016. Yep, about in October or so, failed, fell back, we're challenging again. So there's a potential triple top. 1, 2, 3 attempts to take out this level. Negative divergence tells me that even if we were to pop above it for a little while, unless these divergences are taken out, meaning higher highs in the RSI and the PPO, then that's likely to fail. And the level to watch to indicate that the semis will probably be in a new bear market, or at least Intel will be, is this primary uptrend line off the 2009 lows. Okay, so there's a lot of time spent on Intel. Not my favorite. I have no desire to trade that one long or short individually, but because it's the industry leader, unarguably, so it's worth merits a little extra conversation on that one. TSM, Taiwan Semi, here's where we shorted, I believe, on a breakdown and back test of this bearish rising wedge pattern. And I mentioned this was the first target level. We may have hit that one already, low to 28.34. Maybe we came just above it. And I had also shown this, I expected that level to get hit sooner, and we almost hit it. We came just above it there, but I had this primary uptrend line in place. Now, the problem with horizontal price supports when you have a trend line that comes into play is if the horizontal support level or target doesn't get hit first, as time goes on, that trend line now comes in at a higher level. So in other words, when we shorted this thing, this trend line was down here. I expected this level to get hit first. Well, we reversed just shy of it, came back down another test, but you can see how well prices have reacted off this uptrend line. So that's the level to watch now, this uptrend line. In fact, if I don't already have it, I'll set an alert for a break of that trend line, so I'll know when that happens. But this one still looks good. We've yet to exceed the stop. Is it frustrating to go sideways for months? Absolutely. Depends on who you are. I mean, I would rather trade, get in and out quickly, redeploy that capital in the next one. But until we're stopped out, it looks good right now from a technical perspective, in my opinion. Broadcom. This one blew out our stops. I believe it was earnings induced. Stop was 186. And like everything else, it's gone on to a new high, and that in itself is bullish, but that's a divergent high. Extremely overbought here, or recently was overbought. So not one that I would be chasing on the long side, nor do I see an objective short entry at this point. You'd just be taking a pot shot to short it here. You can look at the 60-minute chart, maybe draw an uptrend line there. There's a breakdown, but it hasn't been impulsive. Now, the key here, guys, is that we need the sector to break down. We need the SOXX, SOXX, SXD, and SMH, those 3 ETFs. When you see those trend lines and those wedges break, then what you'll have is a considerable decrease in failed breakdowns and sell signals on these individual names. That's the problem with shorting individual stocks when the sector's in an uptrend. And I tried to get ahead of it. I thought the breakdowns on those wedges in the sector were imminent. A month or two ago, it didn't happen. Like I said, we were stopped out on, I think, the bulk of these trades, not all of them yet. Here's Qualcomm. Here's one that took a bath. Qualcomm, as you guys know, is a big name, big chip equipment maker, and they've just been slaughtered. And this is what I think you'll see in the coming months on all these names, or a lot of these names, not all of them, but a lot of the names that I'm covering now. Here's Texas Instruments, very well defined, nice uptrend line. We have a tag back here where it generates, and then numerous tags recently. Divergent high. This is a bearish rising wedge pattern, confirmed with negative divergences, about as clean as it gets. If it breaks down, you can see where my target lines are. This is not an official trade, but there's those levels that, and I think over time this would be, especially if the sector confirms, what I would call my preferred target down to the $60 level. And the stock's at about $76 now. So you're talking a drop of about 20%. Wouldn't be a straight line down. You'd see reactions more than likely off each of these target levels. So you can, if you're an active trader, you can try to game the bounces or cover and then short again on a bounce, whatever you want to do there. NVIDIA, this one's proved frustrating. This was a big earnings gap, or this one burned us on an earnings gap. I think we had it as an official trade idea. I know I had it personally. And either way, divergent high right now, that's what I would point out. Potential buying climax here. You can see the huge spike on volume, but I can't make a case to short this one right now. If and when the sector goes, it'll probably follow. There's ASML, that's a foreign semi. There's a uptrend line, pretty well defined, and a big gap to fill. So what I like about this one, I like trade setups where you have intersecting support levels, both uptrend line and horizontal support, price support, which is really the bottom of that gap, roughly 120.70. So to see a break below both the trend line and that gap would very sharply increase the odds of a gap backfill. And so that would look something like this. Backfill would take you down to at least the bottom of the gap. What does that equate to? That's a drop of about almost 4%, not bad, and more than likely take you down to this level over time. Applied Materials, this is a chip equipment maker. They make the machines that make semiconductor chips. They're the chip equipment makers like AMAT and KLAC are typically the canaries in the coal mine, because when things start slowing down, when the orders from the chip companies that make the chips, when the orders to AMAT and KLAC for the machines that make the chips slow down, that tells you that they see things are slowing down. And so again, the chip equipment makers can often give you a heads up of a slowdown in the semiconductor industry, as does the book-to-bill ratio and other things you can look at. But there's a pretty well-defined trend line, a bearish rising wedge pattern, divergent high. There's my price targets. I actually would revise this now to be the first price target right here based on where we're at. This one's moved up. We're at 35 now. That's at 31.20 right there. And then these would be the additional targets. So this one looks good as a swing short. And if I don't have it already, I may be duplicating some of these. I'll set an alert for a trend line break, and that will give me a heads up on Applied Materials. NXPI, nothing much to see there. There's a support line it's been dancing on. That's not one of my favorites, so I'll move on. MU, Micron, all I can see on this one, it is approaching a pretty decent resistance level. There's a trend line to watch, not one of my favorites, so I'll move on. ADI, not much to see. Might have been a divergent high there, like a lot of other names. Almost all of these have divergent highs. A Lam Research, LRCX, there's a minor uptrend line and the primary uptrend line. So once this one breaks, probably take you down to this primary uptrend line, and then if and when that breaks, probably take you down all the way here to 96.22, and then maybe some more. Skyworks, SWKS, not one of my favorites. It's struggling with this resistance level here. Popped above it a little bit, but it's having problems staying above that level and getting up there. That would be the next target if it gets there. Looks like a little head and shoulders pattern here when it topped. So again, not one of my favorites. LLTC, yeah. MCHP, Micron, pretty nice bearish rising wedge, same story. You have these minor uptrend lines. They break, you get a correction, break, sharp correction. Now the next break, there's the only minor uptrend line, if you will, at this point. We had this little false breakdown here of the primary uptrend line. So this is possibly a minor uptrend line here. However, if and when that breaks, it'll trigger a break of the more important primary uptrend line right here. Although it's not drawn out, there is pretty nice negative divergence on that. So this is a wedge. Oh, sorry, trying to talk fast, get it all in. This is a wedge pattern ready to pop. If and when that pops, 6260-ish first target, and depending how ugly the sector gets, this one could fall all the way down here to the 53 level, and that's quite a decent move if it gets there. Again, it's coming in right around that 20% mark. So that's my expectation really for a correction in the sector as a whole, is about a 20% drop. Could be more, could be less, depends a lot on what the broad market does. Xilinx, not one of my favorites, so I'll move on. Maxim took out this high recently. That was bullish. So as long as it remains above there, if you are bullish on the sector, bullish on the semis, then what you want to do is at this point, it'd be prudent, in my opinion, to wait for a pullback, for a back test of that level. So you come down here, you can go long on a back test of that level. It's certainly objective with a stop not too far below, and the stock may continue on. Again, if my analysis is wrong. But if my analysis is right, you have a divergent high here. It's actually even longer standing divergence going back all the way from over here. So if my analysis is correct, this one will go down. Birds of a feather flock together, and for the most part, if the sector breaks down, I'm talking about those 3 ETFs I mentioned, just about all semis are going to go down with it. So a couple more to go and we'll wrap this up. There's QRVO. You can see the levels. You can see how well stocks act off these, you have gaps here. Well, you have a big gap. There's a top of a gap. There was a reaction there. That's why I had that line right there. And you can see we just went up there, hit that line, and failed. Look at that impulsive move down so far. And there's your support level. For those of you looking to get long, I'd probably really call it a support zone. That's where I would step in if I did care to be long, which I do not. I'll make that very clear. I have no desire to go long any of the semis at this point. There's a little minor uptrend line to watch. And if it takes out, if it can't hold that on a back test of this support zone, probably coming down to this level here, 50.27. Marvel, nothing much to say. Double divergent high. We had negative divergence here. Played out for a little bit of a correction. Stock went on to make a marginal new high while still with negative divergence still in place. So my expectation on this one at some point soon is a move back down to at least this 1380, more likely this 1360-ish level, and possibly more, again, depending on what the sector does. Cadence Design had a big day today, looks like that, but what that did is just put in another divergent high, big volume. Could you've, had I pointed this out ahead of time, since you did have a trend line up here off these reaction highs, you maybe could have took a pot shot there, and it did come back in a little bit, but I can't really make a case to short it now. I will say there's divergence in place. It's a big bullish candle. That candle has no business being taken out now. So prices were to come back in and move down below the bottom of that candle, or even below this level, I can see very decent support here around 2640. That would be a big no-no for Cadence if it gave out that level. And then just below that, you have an uptrend line. So that one has some work to do. Again, not one of my favorite right now. MSCC Micro Semi had this little minor uptrend line, which it's broken down below. Broke below, back test, seems to be rolling over. Watch for a break of this recent reaction low from Tuesday. That low was at 52.31. If the stock breaks below that, my guess is lights out. Now, again, not a bloodbath. Possibly, who knows? And you have to check earnings on these two guys. Earnings can make these things go either way. But assuming earnings is out of the way, then I think a break below this level here, let's say 52.25 or so, takes us all the way down here to 45.80, and then quite likely we'll get a backfill here. See this gap right here? There's a big gap. I think that gap will ultimately be backfilled. And to draw it out for you, my scenario would look something like this. Oh, wrong tool. Let's see, move down to there, a little bounce, go long, game a reaction. Only again if the sector and the stock confirms at the time. What I mean by that, if the stock, if I were to short this one as it approaches this $46 level, wherever that exact level is, I would look at the intraday charts. If they were setting up, maybe there was bullish divergence on the 15, 30, 60-minute time frame, plus, more importantly, the sector itself, SMH, SOXX, XSD, those guys were coming to support and looked like they were going to bounce as well, then I would cover and possibly reverse for a long bounce, and then look to recycle back in if the sector still looked longer term bullish for a final move down and a gap backfill to that 40, looks like 42.50-ish area. So that's how I trade that one. And again, you can only cross that bridge when you come to it. It's, I draw out scenarios, and if they start to play out, well, if the charts confirm, then I continue to go with it. But if the charts start to refute my evidence, things have changed, then I will change my views. This is a pretty ugly looking PPO. It could find support here at the 0 line, but both lines are pointing down. The RSI is moving lower, so micro semi looks like it could break down any day now. Teradyne, not much of an opinion. Very well-defined, clear uptrend, and I'm not even going to bother putting an uptrend line on that because it wouldn't have many reactions. It wouldn't be very valid. All right, this one you can draw a little bit of an uptrend line. Nice little wedge there. Looks like it just broke down. Negative divergence. Not super steep, but it is there. Divergence on the RSI as well. So this one may be ready to go. So keep an eye on 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 Semiconductor. Price targets would be there around 1240 and ultimately down here to about 1080. Again, make sure you scrub these for earnings. It's one thing to be in the position for a few weeks, have it profitable, and then hold into earnings, but to take a stock, in other words, to go long or short a day or two before earnings, that's just that doesn't make any sense. Unless you have a very strong opinion that the stock is going to react positive or negative to the earnings report. But again, you guys know that's a crapshoot. There's a resistance level here. So on CAVM, Cavium Networks, we had a divergent high here. It played out for a little bit of a correction. We still have a divergent high actually as this one pushes higher. So there's some cross currents. It took out this downtrend line right here, which is bullish. And it did so with a second consecutive divergent high so far. We need to see that PPO turn back down to confirm the divergence, but that's one I wouldn't chase. But if it wants to, it can run. I don't see really any resistance or not much all the way up here until about $74. So if you're long that one, you want to stay long with a trailing stop or just raise your stops along the way, that's fine. What I'd watch for is a break of this uptrend line as well. And this would be a target down here, 52.30, and if things got really ugly, 50.90-ish, somewhere around there. Last one on the list here, IDTI, Integrated Devices. Same story, negative divergence on the most recent high. There's some resistance there. You can see reactions from above and below. And the stock has already fallen back off that level. There's too much supply on this one, meaning a lot of trades just below it. So I like stocks that have a little bit of more of a vacuum underneath. In other words, not a lot of support. I love to see a gap, a stock just above a gap. It'll enter that gap, whether I'm going long. If it enters the bottom of a gap, I want to go for a move up to the top of the gap long, or on the short side, backfill a gap. This one, as I said, there's a lot of supply. This looks like must be a long-term trend line that I would have probably. Yeah, well, it goes back to 2015. And here's a weekly chart. Not too much. It can just tell you it broke this primary uptrend line, back tested, and is yet to take out that previous reaction high. So, this one may have topped way back here in late 2015. Well, it has topped back then, but it may have entered a new bear market, or it may go on to make new highs. So that's that. All right, so again, just to wrap up, this one went long enough. I wanted to go over the individual components, and again, this is what we need to watch here. We need to watch for a break of these trend lines on SMH and those other two ETFs. But everything that I'm seeing in the charts looks like it is coming soon. You know, if you jump the gun too early, as I have recently, then you end up getting stopped out of those trades. But one thing about me is I'm tenacious. As long as the charts confirm, I will stick with something. I will wait patiently if I'm stopped out. But the charts are still setting up. I will continue to follow that sector and wait for the right opportunity. Likewise, if I am stopped out and the charts, the bullish or bearish picture that I'm tracking starts to dissipate and it's no longer there, then I'll let it go and move on to the next one. You know, I'm not going to try to, reshort or go long a sector or a stock that I was stopped out of just to get even. It doesn't work that way, guys. Just looking for the most objective setups here and the setups with the biggest profit potential. And again, I think the semis may be setting up for that. And if there's not, guess what? There's a dozen or more other sectors out there that are. So we'll just move on to those. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.